Alrighty, let's start today off with USD CAD. Sorry, my throat is a bit wobbly. But let's start off today with USD CAD. I have my sell zone up here and my buy zone down here. In the middle is just the black zone, as we call it, or the void, so we are not going to focus on that. But let's start with my sell zone. Why did I mark my sell zone? I marked it from this engulfing sell guy. Okay, engulfing sell. This engulfing sell kept the price below, and when the price came back, it failed to close above. Hence, this price or this zone is still very much well respected. It created another engulfing sell. Price came back, poked at the key level, leaving wick rejections on both, and you can even see on this H4 itself, poked this lower key level. Okay, so we have two key levels on for this H4. After that, price still stayed below, came up, poked the key level again, and is retesting it. So the sellers over here, from just past experience in the past candles that you can see, the sellers are quite strong in this zone. And if the buyers are able to push it up to test even the higher key level for the sellers over here to be activated, and the sellers overcome the buyers, it will still be a sell as long as the H4 candles still respect the H4 zone. Okay, then we have our buy zone over here. We have an engulfing sell that failed over here. Now, why did I pick this engulfing sell to start with and not this engulfing sell? So if I mark it like this, oops, and I drag it out like this, you can see that excuse me, for this engulfing sell, although this was still a sell, this was still a sell, this was still a sell, this candle over here, if I zoom in, these two broke above this zone, but still was a sell. Now, why is that? So as traders, you have to be willing to adapt to the different candles of the market as the market moves along. Okay, so from there, even though we know this broke this candle or this zone right here, we know that it created this engulfing cell. We also have this engulfing cell and another engulfing cell. So of course you have to adjust to it. Hence, I picked this, the next one. Okay, let me just delete this so we don't get too confused. So after this engulfing cell, price respected, then it broke over here. This engulfing cell then becomes an engulfing fail. Price came back, tapped at the key level. You can see a wick rejection over here. Tapped, created an engulfing buy. But this engulfing buy failed to cause a breakout or a fly into the black zone. It did not leave the zone at all. So we move on to the next one. This also tapped the key level, closed within, and created an engulfing buy. So I'm going to take this as my first engulfing buy. So we have an EFEG buy for our buy zone on H4, and engulfing sell means engulfing sells in our sell zone. Okay, current price is over here. So what can it do? Oh, just to show you also, since we are on H4, right? If we switch, excuse me, because we know this is a sell zone. Now, how do we up the quality of our sell zones? We have to check multiple time frames, right? So what we use is engulfings, we use key levels, we even use EMA sometimes, and we show you that in the process. So since we are on H4, if I switch to daily, right, we know that the current price is near to our H4 sell zone. On the daily, you will also see, what do you see? Let me change this to, my daily zones are usually red. Okay. On the daily, you will also see this. Engulfing sell, another engulfing sell, and the price is testing. So even on the daily, we have a sell zone. How about the weekly? On the weekly, you will see that this, my weekly, let me change colors so it's easy for you to see. My weeklies are this color. So on the weekly, we have this, an engulfing buy that failed. Price came back, created an engulfing sell. So on the weekly, we have EFEG sell. On the daily, multiple engulfing sells, and on the H4, multiple engulfing sells. So this does make the key levels kind of higher quality when you check multiple time frames. Okay, so that's how you can do it. I'm just showing you a way to do it. And this is how I usually do it when I try to check for the highest chance of a sell here or a buy here, just to up the quality and make sure that what I'm risking from my capital to trade in this current market will be worth it. Even if I lose it, I know it's a high quality zone. Okay, follow your trading plan, follow your strategy. Now let's get back to H4. So what can USD CAD do? If I screenshot it like this, we know that the current price is tapping into our sell zone. All right, but because it is a USD pair, you have to wait for the US session for any big movements, right? That's what Mr. Cloud has been telling us. So what can you do? For this Euro session, you can monitor how the price moves. And on H4, once the US session starts, you can see where the H4 lands. Because if H4 still decides to respect this zone, our sell zone, meaning it does not close above this zone, then potentially we can catch a sell back down. But if it decides to close above and breaks the zone, causing this to be an engulfing fail, then potentially it might want to test a higher zone, right? These are all potentials. I'm not saying that it will happen 100%, but it is a potential that it can happen. After breaking, if it does decide to break on the H4 perspective, you have to know that on the daily we still have a big zone. On the weekly we still have a big zone. So what you can do is find the next H4 for a sell. Okay, because on the higher time frames, higher than H4 is still a sell. Either way, if this H4 decides to break our sell zone, potentially after breaking, the price can shoot up. If the volume is high enough, the price can just shoot up into the next zone without retracements, right? Or at least retracing back into the key level. It can do that. Or after breaking, it can also retrace back into our key levels for a better buy up. Okay? Vice versa. If the market happens, whatsoever news happens, which is very unlikely because on forexfactory.com today had no high impact news, meaning not red news, okay? But there are still medium level impact news on the site. Even then, if something happens, let's say, and the price just decides to drop into our buy zone over here, I'm not gonna, do any gambles or any trades in here because it is a black zone. And I like to trade using my engulfings, okay? So I can always monitor within the black zone. If it breaks here, then potentially we'll test here. If it breaks here, then over here, then into my level. Okay? That's how I usually do it. But either way, if it decides to drop into our buy zone and H4 respects that, then potentially we can catch a buy back up. But if it breaks below, then it might want to test a lower zone. Okay, so that's for H4. Now, where do you monitor for any entries? After H4 has closed, right? Wait for the H4 to close to see where you could potentially find an entry from and what the market can do. After H4 is closed, then you switch to M5 or M15 to lower your risk. Some people don't wait for the H4 to close, which is a bit higher risk, but you do you, boo. If you want to do that, still you can switch to M5 or M15. Usually I start with M15 first because that is a higher time frame and I like more data. Okay, I like bigger zones and bigger movements, so I usually go with M15 first. If I can't find any setups on M15, then I will switch to M5. Either way, if you can find on both M5 and M15, then that kind of ups your chances for winning that trade. I'm not saying 100%, but you will have a higher chance on winning that trade. Okay? So what do you look for exactly on M5 and M15? Again, like I've taught you multiple times, engulfing meets engulfings, EFEGs, EFEGGs, or your ABCs. Okay? So focus on that. That's for USD CAD. Now let's move on quickly to GBP USD. Whoa, did I talk for USD CAD? Let me just sip some water. Excuse me. Okay, now for GBP USD. Oops. Okay, let's move the charts a little. All right. My sell zone, engulfing sell, meets an engulfing sell. We have ES meets ES, sell. Then for my buy zone, you can see engulfing buy meets an engulfing buy. The price has just been bouncing between these two, going in a sideways manner. So either you can wait for the price to tap into the key levels for a buy here and a sell here if the market continues on a sideways, or if you are a breakout trader, you can either wait for either of the levels or either of the zones to be broken first, then use the key levels for the opposite direction. Meaning, for my buy zone, if H4 decides to close below, if I'm a breakout trader, sometimes I do trade breakouts, depending on the market situation, okay, depending on my mood and everything. But if you are a breakout trader, this is what you can do. We have a buy zone here. If H4, either of the H4s or any one of the H4s decides to close below the zone, you can wait for the retracement back into this level for a sell back down. Vice versa, if you are using this key levels over here and you are a breakout trader, you can wait for the price or H4 to break above this zone and retrace back into the key level for a buy. Okay, but if you are an SNR trader, you use support and resistance, you can also sell here and buy here. Okay, so it really depends up to you what your style is and how you're comfortable in maneuvering to the market. Okay, I'm just giving you options over here. So again, what can GU do? Dun, dun. Current price, like I said, if it taps into our buy zone and respects it on H4, meaning it closes within the zone, not below, then potentially you can catch a buy back up. But if it breaks below, then it might want to test a lower area. Vice versa, if it decides to drop or fly in, to our sell zone and respects that, then potentially you can catch a sell back down. But if it breaks above, then it might want to test a higher area. Okay, so that's for GU. Now we know that where to enter, what time frame to monitor for any entries, where do you place your SLs. As a trader, when I trade currency pairs, I usually set 40 pips, right? That gives a bit of space in movements, or enough space for the price to move a little before continuing in its direction. Because currency pairs is not like gold, right? When it's compared to gold, gold is very quick. Snap of the finger. But with currency pairs, sometimes it needs a little bit of movement. It needs a little bit of reassurance from multiple candles and time frames before, like, oh, yes, I'm going to fly from here or I'm going to drop from here. Okay, so 40 pips SL from your entry, meaning once you find an entry within these key levels, count 40 pips above your sell zone or below your buy zone. Okay, so if you're able to catch a buy here, just count 40 pips from your entry. If you're able to catch a sell here, count 40 pips from your sell entry. Okay, so that's for GU. Now we switch to CAD JPY. Okay, now I don't want you to be confused, but I have not marked the key levels over here so we can mark it together. Okay, some of you have been waiting for my webinar, some of you still don't understand, so I'm gonna mark it for you to see live on this video. Okay, so my sell zone, starting with my sell zone first. If you remember, it was a few weeks ago, I think maybe 2 weeks ago, I gave a CAD JPY analysis and I told you to monitor this particular engulfing sell, because this engulfing sell on H4 caused this drop. Just on H4, this H4 it was 360 pips. So I told you to monitor this, and if it comes back up and respects it, then it might want to drop again. So when it played around the key level, even if you take the sell from the key level itself, it dropped from here into this buy zone. But let me just take it from the H4 itself, okay? From the key level on H4, it gave 60 to 70 pips just from on H4. And you know how currency pairs are quite slow. Okay, so that was a good, how do you say? A good prediction, a good prophecy that was waiting to happen. Okay, but either way, let's move on. We have an engulfing sell here, a very, very strong one, right? Meets another engulfing sell over here. Okay, current price is within the sell zone, and it on this H4 it already tapped the key level, but we'll see. because if it's already tapped and it's ready to just drop, it will just drop. We will not race to chase the market. If it decides to be nice to us and retrace back into the key level for us to catch a sell here, then we will catch a sell here. But either way, do not chase the market. Wait for the market to come to us, okay? So that's our sell zone. Then for my buy zone, I have an engulfing sell that failed. Price came back, bounced a little, showed multiple wicks. This was the first engulfing buy. Then we have another engulfing buy, multiple engulfing buys. So complete ABCs for this. That failed to break below this engulfing fail. Okay, so far the buyers over here are quite strong enough to keep the price above. Okay, current price is in the sell zone. What do we do after we mark the H4 or your zones on H4, right? We switch to M15 to find our key levels. Now, what do I usually do? Okay, with my naked eye, I try to find an area within this zone, right? An area where price plays with support and demand. There must be an imaginary zone where if it comes into contact, either shows resistance, or if it breaks above the area, it will just bounce as support. There has to be. And if you can use that to pinpoint, just draw a box over like this. Ooh. Let me change the colors. My H4 pairings, okay? So if I draw, it would look like this, okay? Resistance over here, a lot of wick rejections. If it breaks above, bounce, 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 support. And if it breaks below, uses it as resistance. So now we have this imaginary zone. How do we refine it? I will line my box, imaginary box, up with lines like this. Okay, now we refine it. Because I'm on M15, okay, let's just say I'm currently on M15. What do? Is I try to find an engulfing that happened within or in between these lines. Doesn't matter what engulfing it is. It can be an engulfing buy or an engulfing sell. But as much as possible, I want the whole candle to be in between these lines, meaning body and wick as much as possible in between these lines. Now on M15, as you can see from here, I can't really find any engulfings that happened within these lines. This had the whole body in, but the wick was left out, and most of the wick actually was left out. So I'm not going to consider this. So what do? I switch to M5. And I look like this. So where's the first engulfing that I can find? If we look this way, we can see this is not an engulfing. This is not an engulfing. This is an engulfing sell, but one-third, is out of it. Then we have this engulfing sell, but we have a bit of wick outside. So the next one is this, an engulfing sell, body and wick included in between these lines. Okay, so now that I have that, oh, also just to make it clear, we also have this engulfing buy over here, which you can use. But as price goes by, with history and everything, I usually use the recent ones, okay? The latest one at least, because price will be more reactive to that. People don't really go too far into history sometimes, okay? Because in reality, people are lazy, right? So we like to use the latest news, the latest candle, latest something to base our judgment on that. Okay, so that's just psychology. So with that being said, I'm going to use this because this is the first engulfing that I can see in between these lines. But if you want to monitor this also, you can just mark this high and this low. That is completely up to you, okay? Whatever you are comfortable with, but I like mine to be precise. So I'm going to line this up, the candle from top to bottom, wick to wick, like this. And now I have my key level. So to check if it works or not, right, I will zoom out like this and you will see the price has to play within the key level, whether it pokes, consolidates, or whatever, but it usually will drop from that key level or fly from that key level. So you can see price over here did this, poke, left a wick, drop. After it broke above and wanted to stay above, it consolidated a bit, tapped, tapped, tapped before flying. came back in, played around the area, flew, and that is it. Even over here, tapped the key level, flew, tapped the key level, flew. Okay, so now we have our key level, and we know this is the key level that works in our buy zone. Okay, because we have a tap here, consolidation over here, still failed to break below on H4, flew, played around the area, still created an engulfing buy here and flew. Okay, so we have our key levels for CAD JPY. Now on H4, getting back to where CAD JPY, or what can CAD JPY do? Let's just delete some arrows. All right, so what can CAD JPY do? Let's zoom and do this. Okay, screenshot, current price is just right below the sell key level. If H4 continues to respect it, then potentially we can wait at the key level. If it wants to retrace back and be nice to us, retrace back into the key level for a sell. But if H4 decides to break above the zone, then it might want to test a higher area. Vice versa, if it does not want to retrace, but it's still respecting our sell zone and it just decides to drop, we can wait for a buy in the buy area, okay, in the buy zone. If H4 closes within respecting our buy zone, then potentially we can catch a buy back up. But if it breaks below, then it might want to test a lower area, okay? After breaking, like I said, the price can shoot down in one go or retrace back into the key level for a better sell down, okay? So that's for all the three pairs. Wait for the Euro session to end. Continue to monitor the pairs. Pick a pair that you like the most. Or if you are an expert and you are advanced, you can monitor all three and see what gives the most or the highest probability of winning. Okay? I will update the pairs in a bit. In a few hours, probably post-Euro session, pre-US session, and also post-US session. Okay? And then I'm still getting back to the messages. So I'll talk to you soon. Bye!